Hi, Assalamualaikum. My name is ERINA NABILA binti Mama HARYADI. So today we are going to start with company background. Sunway Group was founded in 1974 with the goal of promoting sustainable development. Sunway Group is one of the Southeast Asia leading conglomerates with core interests in real estate, construction, quarry, trading and manufacturing, building materials, education, healthcare, retail, and hospitality spread across 13 business divisions and 50 locations globally. Tan Sri Dr. Sri Dr. Jeffrey Chiah Au is the founder and the CEO of Sunway Group. The company's headquarters are located in Bandar Sunway, Subang Jaya, Selangor. Sunway Berhad focuses more on real estate and construction. It has built over 30,000 homes and has nearly $11 billion in assets under management through its REIT division. All of this cannot be accomplished without a workforce of 16,000 people. Sunway Group is one of top 100 Bursa Malaysia securities Berhad companies in the main market. Next, I will go over to management approach. To begin, consider the following factors when considering having a segmental reporting. The chief operating decision maker should consider the following factors. The nature of the business activities is the first factor to consider. It is defined as any activities carried out by the company with the goal of maximizing profit. Next, the existence of manager responsible for the activities. Each segment is managed by an individual who is responsible for ensuring the segment performance and communicating with the CODM about operating activities, financial results, and segment plans. The third factor is information provided to the board of directors. The CODM may refer to the board of directors to assess the information because it contains reliable information about the entity's performance. If these factors are similar, the entity may consider aggregating multiple operating segments into a single segment. The first one is the product or service nature. It is referred to the types of goods or service offered. Sunway Berhad products or service included properties development, investment, leisure, construction, hospitality, building materials, quarry, and many more. Next, the nature of manufacturing process. It is referred on how products are manufactured and how services are provided. Healthcare, for example, included the operation of medical center as well as medical consultation service. The third factor to consider is the type or class of customer for the product or services. It refers on how the company provides customer satisfaction for its product or services, and also it refers on how customer is classified by the company. It differs from one customer to the next customer. For example, customer types based on income, geography, and interest. Finally, the method used to distribute product or provide services. It indicates on how the product or services are delivered to the customer. The company employs various types of plants, machine, and motor vehicle for each business segment. We proceed to the types of segment. There are two types of operating segment. The first one is business segment that is based on a single product or service or a group of related product or service. Sunway Berhad operates in 8 business segments, which are property and development, trading and manufacturing, investment holding, property investment, quarry, construction, healthcare, and others that include hospitality, leisure, and building materials. The second is a geographical segment, which offer product or services based on region or economic environment. Malaysia, China, India, Singapore, Australia, Indonesia, the United Kingdom, and other countries such as Vietnam, Thailand, Cambodia, Myanmar, and Philippines are among Sunway Berhad geographical segments. Let us now proceed to the Chief Operating Decision Maker. The Chief Operating Decision Maker is a function, not a specific manager with a title. It will differ from entity to entity, and it could be Chief Executive Officer, CEO, Chief Operating Officer, COO, Chief Financial Officer, CFO, Senior Management Team, or Board of Directors, who is in charge for making strategic decisions for entity segment. The Chief Operating Decision Maker is responsible for allocating resources to segment and evaluating the performance of the operating segment. Sunway Berhad Executive Chairman and Non-Independent Executive Director, Tan Sri Datuk Sri Dr. Jeffrey Chiah Au, is the company Chief Operating Decision Maker. Tan Sri Datuk Dr. Chew Chee Kin, the President Non-Independent Executive Director, who is responsible for meeting the group business performance target and implementing the board strategies and policies. And Ibn Chia Yen Shin, the Executive Vice President at the President Office and Chief Executive Officer of Sunway Berhad in China. Other Board of Directors in Sunway Berhad are Datuk Sri Idris Jalla, Tan Sri Datuk Seri Rasman M. Hashim, Datuk Zaitun Muhammad Hassan, Sarena Chiah Yanti, SMS, Datuk Tong Poh Kiau, Philip Yo Liat Kok, Tan Sri Datuk Dr. Lin Sian, Tan Sri Datuk Dr. Rebecca Fatimah Star Maria, and Tan Sri Jamaluddin Ibrahim. Sunway Berhad also have Chief Executive Officer and Managing Director for its business segment, which are Chu So Kyong, the Group Managing Director Construction Division, Lee Chuang Sheng, the Chief Executive Officer of Quarry Division, Yo Yuan Chi, the CEO of Trading and Manufacturing Division, Denny Ng Boon Liang, the CEO of Building Materials Division, Chan Hoi Choi, the CEO of Sunway Shopping Malls and Theme Parks, and lastly, Lau Beng Long, the Managing Director Healthcare Division.
Hi, my name is NURUL and I will continue the part A, which is Segmental Report, MFRS 8. For this slide, I will talk about the process of identity reportable and non-reportable segment. For the process, we have a 6 element, which is first, identity all operating segment. Second, evaluate operating segment for aggregation. And third, 10% threshold test. Fourth, evaluate operating segment for aggregation again. Fifth, 75% threshold test. And the last process is aggregate remaining operating segment. Okay, for the first step, process of identify reportable and non-reportable segment is identity all operating segment. Identification of operating segment within the company is central to the discussion of segment reporting, and operating segment is a component of an entity. First, engage in business activities from which it may earn revenue and incur expenses. Slide including revenue expense from transaction before other segment. The second one has its result regularly reviewed by the company Chief Operating Decision Maker (CODL) and has discrete financial information available. For the step 2, evaluate operating segment for aggregation. Before we look at quantitative just whole, it may be approved with a company multiple operating segment together within the segment disclosure. Similar operating segment criteria have two, which is long-term performance and economic characteristic. If two or more operating segment has similar economic characteristic and projected in long-term performance, they may aggregate together as long as the following elements are also similar, like nature of product or service, nature of production process, type or class of customer, method to distribute their products and services, nature of regulatory environment, for example, banking, insurance, and public utilities. the emphasis is on the future prospect. So even if two segments are behaving similarly at present, aggregation will not be approved with it if the future expected to be different. If two segments have previously behaved differently but allow the project to be similar in the future, that may be aggregate. For the third process, we can use the quantitative threshold test. We need to calculate it according to each formula until we get the value of more or equal than 10%, and the segment will automatically become a reportable segment. And all the tested reportable segment need to be tested for 75% of the total revenue requirement test to qualify the reportable segment as reportable segment for all. Then it will definitely classify as non-reportable segment and need to be disclosed under other segment category. Category of quantitative threshold test have three, which is first, revenue basis. This explains about external and internal value. Should be more or equal than 10% of all the combined revenue of all the operating segment. And the second one is profit or loss basis. For this category, tell us about profit or loss must be more or equal 10% from its total. How to determine whether to choose profit or loss? It actually depends on the greater value in absolute amount. You need to take a greater absolute amount. And for the last one is asset basis. For this one is more or way is like the same in previous category. It have to more or equal to 10% from all the combined asset of all operating segment. The fourth process of identify reportable and non-reportable segment is evaluate operating segment for aggregation. We have to look at the remaining operating segment, those that did not qualify under of any 10% test, to see if any are economically similar. This process is more like process of step 2, but the requirement is more good. 75% threshold test. To identify it, the combination of external revenue of identified operating segment must be more or equal to 75% of the total external revenue of the entity. What happens if 75% test didn't meet? If 75% test didn't meet, we must identify the more reportable operating segment even though the segment failed to 10% threshold test until at least the 75% meet. For the last process of identify reportable and non-reportable segment is aggregate remaining operating segment. After we identify all separately the reportable segment, the information for all other segment is aggregate into all other category. The only requirement for all other category is that the sources of the revenue should be described as part of the disclosure.
Assalamualaikum, my name is LIYANA binti Muhammad SOHAIMI and I will explain about segmental report. The first one is 10% threshold test. Sunway Berhad consists of property development, property investment, construction, trading and manufacturing, quarry, investment holding and others. The formula that will be used is the segment's total revenue divided by the total revenue of all segments and multiply with 100%. As a result, there are 4 reportable segments and 2 non-reportable segments. The 4 reportable segments are property development, construction, trading and manufacturing, investment holding and others as they pass the 10% threshold test. Next, for the calculation of the 75% threshold test, we will use the formula of total external revenue of reportable segment divided by the total external revenue of all segments multiplied with 100%. The result will be 82.51%. So, there is no other segment will be included as it has satisfied the 75% threshold test. So we move to the new segmental report. As we can see, the new segmental report has been divided into two categories, which are the reportable segment and the non-reportable segment or other segment. For the reportable segment, there are properties development, construction, trading and manufacturing, investment holding, and others. And the other two, which are quarry and property investment, fall under other segment because they failed to satisfy 10% and 75% threshold test. Next, the advantages of segmental reporting to the company. It provides a better assess the risk and return of the company. The disclosure of financial information can make investors believe in the rewards and risks. Also, it provides a better understanding of the performance of the company. It helps investors to understand the business and its cash flow. Also, it helps shareholders to get a better understanding of the fluctuation that may affect the overall number. The last one is transparency. It can reveal areas that are more profitable that operate in the different categories or geographic areas. Also, managers cannot hide any unprofitable venture.
Okay, I will continue about this advantage of segmental report to the company. For the first point is data manipulation. For this point, the segment reporting can be manipulate their own data and presented to management. Besides, cherry pick matrix can be happen, where the company will select the segment and manipulate the data of the segment to show that the segment has the best performance, which can convey the desired message to stakeholders. The second one is misunderstanding may occur among investors. An investor must be utilized to the information about the segment reporting to help them to find the right balance of their portfolio. But if this information are lacking, the investor might unwittingly retain to great commitment to one only industry and miss out investment opportunity to other company because they fail to understand and evaluate them in light of goal.
Hi, Assalamualaikum. My name is UMAIRAH Sofia binti Muhammad FIKRI and I will explain part B, A, B and C questions. For question A, I found out that there are two types of basis preparation of the interim reporting. First one is the integral approach. In other words, the interim report is an integral part of the annual report, and deferrals and accruals should take into consideration what will happen for the entire year, and in this approach, companies should assign estimated expenses to part of a year on the basis of sales volume or other activity basis. However, as for the discrete approach, companies should treat each interim report as a separate accounting period. Using this treatment, companies would follow the principles for deferrals and accruals, should take into consideration what will happen for the entire year. In this approach, companies should report accounting transactions as they occur and expense recognition should not change with the period of time covered. Based on my previous explanation, we could see that Sunway Berhad is using the discrete approach for their interim reporting. The first accounting policy used in Sunway Berhad in preparing the interim report is MFRS 16 leases, a contract or a part of contract that conveys to the customer the right of use an underlying asset for a period of time in exchange for consideration. All contracts that meet the definition, regardless of their legal form and the period of time, should be subject to this requirement. Next, Sunway Berhad used MFRS 140 investment property as one of its accounting policy. This standard requires all entitles to determine the fair value of investment property for the purpose of either measurement, if the entity used the fair value model, or disclosure if the entity used the cost model. As we could see, Sunway Berhad is using quarterly interim reporting to prepare its interim report. The first quarter ended on 31st March 2021, while the second quarter ended on 30th June 2021. Next, the third quarter ended on 30th September 2021, and lastly, the fourth quarter ended on 31st December 2021. The types of interim reports prepared by Sunway Berhad are unaudited condensed consolidated statements of financial positions, unaudited condensed consolidated statement of profit or loss and other comprehensive income, unaudited condensed consolidated statements of changes in equity, unaudited condensed consolidated statements of cash flow, and finally other selected explanatory notes.
Assalamualaikum warahmatullahi wabarakatuh. My name is AKMAL HAKIM bin MOHAFIZ, and now I will be presenting the period for the current and comparative of each statement prepared by Sunway Berhad. So Sunway Berhad prepared their reports for every 4 quarters for every year, and now is the 4th quarter, which is starting from 1st October of 2021 and ended on 31st December 2021. So firstly, on the statement of profit or loss and statement of comprehensive income, there are 2 periods, which is the first one, 3 months ending, starting from October to December, and then the second one is the 12 months ending, which started from January until December. So for the current interim report, the periods are 3 months ending, which is starting from 1st October 2021 until 31st December 2021. Same as the comparative, which started on 1st October 2020 and ended on 31st December 2020. And then for the second period, which is the 12 months, the current interim report started on 1st January 2021 and ended on 31st December 2021. And for the comparative, which also the same, started on 1st January 2020 and ended on 31st December 2020. Next, for the statement of financial position, the current interim report started on 1st October 2021 and ended on 31st December 2021. And for the comparative, started from 1st October 2020 and ended on 31st December 2020. Next, for the statement of changes in equity, it started on 1st January 2021 and ended on 31st December 2021 for the current interim report. And for the comparative, which is also the same 12 months period, started from 1st January 2020 and ended on 31st December 2020. And the last one, the statement of cash flows. For the current interim report, it started on 1st January 2021 and ended 31st December 2021. And for the comparative, it started from 1st January 2020 and ended on 31st December 2020. So next, for the adjustments made by the company to be included in the interim report are firstly on the inventories. The cost of inventories are 2,423,004,000, and for the net realizable value are 2,100,000,000. In this case, for the value of inventories, we must choose the lower of cost and net realizable value. So, the net realizable value are clearly lower than the cost, which are 2,100,000,000. So therefore, the cost of inventories as at 31st December 2021 is 2,100,000,000. So, for the next adjustments are made on account receivables. During the year end 2021, the amount of account receivables is 2,483,840,000. It is estimated that there will be 15% uncollectible by the year end. So, what we need to do is we need to calculate the amount to be reported. So, we will calculate it based on the formula gross amount multiplied by collection rate. So, the amount 2,483,840,000 will be multiplied with 85%, which are the collection rate, and then we will get the amount to be reported, which are 2,111,264,000. So that's all the amount to be recorded. So finally, for the extract of the financial statements for Sunway Berhad before the adjustments are 2,423,004,000 for inventories, and after adjustments are 2,100,000,000. And for the account receivables are 2,483,840,000, and after adjustments are 2,111,264,000 for account receivables. So that's all for me. And